Well, good afternoon, everyone. It's coming up to 3:30 here in the UK. I suppose that's what, 10:30 in the US. And as you probably are all aware, the US CPI number, inflation number, came in slightly lower than expected, but that caused the market to, in fact, run up and run up strongly. It's given quite a bit of that back already. It was up 90 plus points at the open and now up 67 points. So let's see what the rest of the day can bring. The short-term trend in VectorVest has turned up. The underlying trend is up, and the longest-term measure of the trend is up. There's a medium-term measure of the trend, which I use for my swing trading, called the DEW, which is also up, and it's been up now for the last, since 25th of October. So at the moment, today, VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If we have a look at the VectorVest composite, and that's the VectorVest composite, folks. I put on the medium-term market timing system called the DEW, which has been saying that it's been safe to buy stocks since the 25th of October. It came close to giving a sell signal here, but didn't quite. Okay, and as you can see, there is a trend line drawn along those tops, and we seem to have broken through the trend lines, gave it back, and that's that big gap up that we saw at the open today. So this market looking for any reason, ladies and gentlemen, to rise. I think that a note put out by JP Morgan yesterday, they said that if the inflation number should come in around 7, that the bear market is over. So market reacting to that today. I didn't make any money out of this, but yesterday afternoon at the VectorVest Q&A, which I do every Monday afternoon, I noted that my dear old friend, the 8-day in this case, stochastic, was saying that this market needed to bounce, and a very strong signal from the stochastic. Got something out of it yesterday, but I didn't get into the move today. That is falling, that's rising. That's a concept called reverse divergence, and it was saying that the probable direction here was up. Did okay out of it yesterday, but as I say, I didn't get into the market before the announcement. There's enough money to be made during the course of the month without gambling on announcements. So if we have a look at the intraday market on the S&P, this is a 15-minute chart, folks. That's a 8-bar moving average that I sometimes put on. Yesterday, I was long from here as it started to move up. I was looking for any reason to go long yesterday, and as it broke above that 21 period moving average, that was as good a reason as any, and I rode that out. There was 25 points in that. This is this big gap at the open today, and I've in fact shorted it just there on a gap fill. We shall see whether there's any money in it or not. I went short at 60, and we're now down at 53, so it's hardly I went short at the whatever that low is. I can't quite remember what it is. The low price, 69. Went short at 68, in fact. 68, but stop loss is as wide as the rear end of a number 27 bus. So the position size is my just starter position size. So 69.53. It's right up 15 points. Let's see, it'd be great if it closed that gap down to that 21 period moving average. My God, it's got a long way to do that. I think, folks, if this gap should fill, or at least try to fill, and then move up, then there could be some really, really good entries and stocks down there. The gold price has gone quite well. I'm very happy with my GDX position. If we have a look at the GDX, this target position off a bit today. It trying to get through an old high, but the GDX going really well. And I noted that the copper price has moved up quite nicely. So my BlackRock World Minerals is going quite nicely, but that's the GDX off this low. This was taken off a 5-year chart, and this is one of my favorite patterns. It's called a Gartley pattern, and as you can see, it found nearly 2 months worth of accumulations as a weekly chart on that 78% retracement and moving up very strongly indeed. This is a very interesting week, although it's only Tuesday, because if we have an inside week and then an outside week, invariably that in fact preempts a huge move one way or the other. It tells you it's a volatility or an energy pattern. I call it a pop gun, and clearly this outside can't go away, but between now and the high and the low can't change between now and Friday, but it's only Tuesday afternoon and we've got Powell tomorrow. But next week, a breakout of this particular pattern, one way or the other, should produce an exceptionally strong move. Pop gun candle patterns, not that common on charts, but when they do appear, they produce some explosive moves. So very happy with that. I think that the gold market needs to pull back a little bit, but there's certainly no signs of that today. I see the pound against the dollar up at 124, and it'll be 6 weeks ago, the journalists here were writing that the pound is dead, never to be seen again. And I've absolutely no doubt that in a few weeks' time, the same journalists will be writing that the pound's so strong we can't sell anything in the UK. So quality of journalism at times leaves an awful lot to be desired. Anyway, if you haven't taken your library book back and you're feeling guilty that you've stolen a library book, just be happy that you haven't been put into court for 1.8 billion, as our friend Sam has in wherever he is in the Caribbean today. So, folks, very positive for markets today. I think this market needs any reason to move up. We shall see what Powell says tomorrow. If it can get through this particular resistance, then it can move an awful long way. Because if we have a look at this on a 5, again on a weekly chart, now I'm jumping around a little bit, but if we look at this on a weekly chart, there's no doubt that my weekly stochastic is right in the overbought area, but it can stay up there for a long time. But if this is a market bottom, then we've got a full year down and only, I think, 13 weeks up. So even under the most bearish circumstances, this can move up strongly over the next few weeks and make a decision for us somewhere up around the 62% retracement of the last range. And that could, in fact, be the Santa rally. And clearly when it gets up there, it'll make a decision for us. So very bullish afternoon, the market coming back a little bit. I just need to be careful in this position against this strength, but I'll watch this for the rest of the afternoon now. It's 14 points up, might be time to maybe take a little bit off and chill a bit. So tomorrow at UK time, 6:30, the Fed will announce its rate decision, and then at 7:30 UK time, then Mr. Powell will speak, and that is going to, in fact, be the catalyst that will, in fact, keep this market going or send it flying to the floor. A strong reaction today to that slight downside surprise. The strength of the move up, in fact, surprised me. But as I say, my stochastic, in fact, on the daily chart was screaming that this market wanted to rise from yesterday afternoon. So let's hope for a good run into Christmas. The statisticians tell me, seasonality based, that the Santa rally starts on the 11th trading session of the month. And the 11th trading session of the month is in fact tomorrow. So we're only out by 1 day. So just watch for this to pull back, and there could be some great opportunities somewhere down around that level. Thanks very much indeed. Bye-bye.